Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
This is the final roundtable of 2011, so that means we want to take a look at the year ahead, 2012. Steve, you have an outlook for 2012?
I do have an outlook.
In 30 seconds or less?
Well, I don't know about that, but I'll try my best. A lot of talk about Europe, a lot of talk about China, but I think that those issues are overly discounted in the stocks. I think that the United States, the economy continues to muddle through. I think that economic growth will be, on average for the year, somewhere between +1% to +2% of the year. That's not that robust, but it's enough to create positive earnings growth. When you take a look at earnings for the S&P 500, that will probably come in somewhere between 100 to 105 per share, and a reasonable PE of 13.5, 14, given the growth outlook. I think S&P 500 of 1,400 is about the upside potential. That's about 15, 17% from where we are today. So I wouldn't, and that's because we didn't get the upside that we should have this year. Okay, so we're just kind of the extra 5 to 7 points we should have this year is plunked onto next year, muddle through growth, positive outlook for stocks.
And we'll get more specific in a second segment where we'll look at sectors and possible picks. All right, Shiraz, your broad outlook for 2012.
Yeah, I agree with the U.S. economic growth outlook that Steve outlined. I think Europe remains a drag on the market for quite some time into 2012. I'm very interested in seeing what the Europeans do in the March summit. My sense is that this broad correlation within stocks and also within the different asset classes, it carries through at least through the first half of the year. I see that the first half remains very similar to what we had been seeing over the last 2-3 months. Once we get some clarity on the European situation, then I completely agree with the growth outlook for the market for the back half of the year. China, I'm not in the camp that it's going to implode. I think it's a 7-8% growth momentum in their economy. They have plenty of firepower to incentivize growth in there. So overall, my picture is quite favorable and bullish for 2012.
All right, Kev?
2012, I have more clarity on the beginning part of 2012. I think that we get to 1325, 1350. And again, I think that happens probably within the first 3 months of 2012. This is all predicated on the idea that the U.S. economy is getting better. You can see that in report after report. You can also see this in our improving jobless numbers. You see the jobless claims falling. You see employment going down. And you see new jobs being created at, I don't want to say a robust pace, but at a pretty good pace. My call is also predicated on the idea that I don't think Europe gets meaningfully worse over the course of the next 3 months. I believe they're going to figure out how to get their act together. I believe Europe is finally going to be able to show the market the money because they need to fund the EFSF, they need to fund the EMS, they need to figure out how they're going to get this $200 billion to the IMF. But I think they are going to be able to move forward and get this thing on the books. However, I do believe that above 1350, I'm skeptical of the market. So if I were to look at it, I think we go up to 1325, 1350-ish. I think there's going to have to be a bigger catalyst to get past 1350. I think once we get to that 1325, 1350 area, we're going to back down a bit. But if we can see GDP in the U.S. above 2%, and if it looks as if all of this debt maturation in Europe is able to get reconciled satisfactorily, then I think we do have the chance to get to that 1400 area by the end of the year. But I'm more clear on the first 3 months. I think 1325 before 1100.
And then it'll be a sell in March and go away?
It's going to be a wait and decide in March.
That's what I think. 30 seconds for this one.
That was 30. That was 30. You timed
that was a minute 30.
That was less.
But Kevin, we're not going to let you off the hook. Let's hear your.
We're going to go. We're going to go over 5 minutes on this one. So all year I've been in the camp that Europe fixes itself, right? I'm beginning to have doubts about that because of the way they're dragging their feet. And I wrote a piece this morning on RTI, the real moral hazard for the ECB. It's not inflation. It's not credibility. It's that if they give in, they're going to be flooded with beggars, so to speak. In other words, beggar nations, right?
Yeah.
And it's never going to get fixed. So as long as they hold off, and get as much reform as they can, agreements and concessions, they have to do that, because the real hazard is if we give in now with printing presses, which we're not allowed to do anyway, right? They'll create a much bigger problem. The trouble is, though, they can stare into this abyss, right? Economic collapse is possibly before them, and and just let it happen. So that's what I'm most worried about. So we don't know how bad that could get, say, into the middle of next year, and then what does that do to a European recession? Maybe we're pricing in a European recession of 2 or 3 quarters of -1%. Who knows? It could be much worse. Look at our recession in 2008. So while I'm a bull on the U.S. economy, and I'm still bullish on China, I think that things could get worse for Europe. So I see the first quarter for U.S. stocks. I think we're going to go up to 1350, and then we're going to find out if Europe is going to really do anything or not.
Okay.
All right, we're going to come back in segment 2 and get specific sectors that guys are watching and maybe some stock picks.